Well, good morning, everybody, and thank you for joining us. I'm excited today to talk about our topic, uncertainties in agriculture, and we've got some really great experts joining us this morning to discuss this topic that is no stranger to all of you involved in agriculture. And so today with me, I have our Regional Vice President of Agricultural Lending, Gary Coleman, David Widmar from Agricultural Economic Insights, and Dr. Brent Gloy from Agricultural Economic Insights as well. So we're super excited to be joined today by David and Brent, the co-founders of AEI, as they bring their expertise to this conversation around how do we manage these uncertainties, and maybe how do you start to change the way that you think about these challenges within agriculture. So with that, I'm going to go ahead and kick it over to you, Dr. Gloy, and thank you for joining us.
Thanks, Mike. It is great to be with you today, and I'll say hi to everybody. I'm joining you from Southwest Nebraska, where it is actually looking like it might rain today, which would be a rather unique outcome in this world of uncertainty. So the one thing that's been certain this summer is it hasn't rained. I think here at our farm we've gotten something like 5 inches for the whole year. So we're living the desert life, not enjoying it that much, but if you're just trying to live here, it's all right. Not trying to grow anything, it makes it tough. But welcome. And what David and I want to talk to you today is about uncertainty in agriculture and what you can do about it. Because it is kind of the hand we're dealt in agriculture. And we have to understand and think about how to manage through that. And so let's go ahead and get started. And one thing I will say is that the last couple of years have been really good. Now, if you would have told me that we were going to have a pandemic, that it was going to shut down the U.S. economy. We're going to see unemployment, as high as we've seen since the Great Depression. Um, there is not a chance I would have predicted that we would be staring at, the potential for record high net farm income in the U.S. ag economy, for not just 1 year, but 2 years. And so times have been really good. And I think kind of unexpected. The interesting thing I would say is that when you look at Purdue's Ag Economy Barometer, which kind of is a measure of farmer sentiment or how farmers are feeling around the country, you look at that and it doesn't really line up with the economic conditions. So if you look at the sentiment gauge on the right, it's not at a low, all-time low, but it's certainly not all-time high. And if you had told me we'd see December corn prices at, $7 a bushel, I would think this barometer would be a lot higher. So one of the things I think we have to kind of get our head around a little bit is why is that the case? And I think it's just there's so much uncertainty, and certainly things like high fertilizer prices are contributing to kind of the overall situation of, well, I just don't know how great it really is. But I think when we do the numbers, and David, I think the budgets on the next slide will help point that out. Um, Times are pretty good, and it's important to remember that as we're making decisions about these prices.
I think the other thing, Brent, to keep in mind is um, some of the stress is from the higher stakes that are involved. So we've seen production costs go from about $4 a bushel in 2020, putting in that crop with much lower fertilizer prices. This was kind of the budget before the pandemic even happened, but we saw, energy prices that were low and they got even lower throughout 2020. And then all of a sudden, in a very short period of time, we went from $4 a bushel to plant the crop to probably close to $5.50 a bushel. And so there's more chips on the table, and so even though there are economic profits out there, there's more at stake. And so these budgets are sort of if everything goes all right. But as we start thinking about that 2023 crop, we're putting out at 5.30 a bushel for corn, maybe close to 5.50 in some cases. And we hope the commodity prices stay there. But if commodity prices rapidly change, or we have a drought, or we have to rely on crop insurance, that's going to start to reflect all this risk that's involved. The second thing to keep in mind is there are just a lot of factors that are going on that are unfamiliar to us, maybe. Maybe they're once in a generation, or they're a couple times in our life that we're going to experience these events. And mostly they're exogenous, which is a way of saying that they're outside of the agriculture economy. They're outside of the balance sheets that the USDA puts out. They're outside of the traditional measures that we think about. And each one of these, Ukraine and Russia, inflation, the interest rate situation, a stronger dollar, the possibility of a U.S. recession, all of those could be deserving of their own webinar that we could talk about at length for 30 minutes. But we just want to put this out there and say these are things that are outside of agriculture, but in a lot of ways they're driving the driving force. So we have a tight stock situation that's important, but the Ukraine and Russia narrative has been an even bigger factor, for an example.
Yeah, and I think when you look at these are things that make it really tough because they're really outside of our control. But when we look at kind of the budgets as we did, that last slide showed, so basically, we're not seeing that costs are going to be any lower going into 2023. And in fact, some of them will probably be higher. And so, you know, as we look at it, that's kind of the situation that we think we're dealing with this year is a world with high costs, a lot of uncertainty looming.
And that recipe, Brent, creates a lot of chaos for decision makers. It creates a lot of angst. It creates a lot of stress. And I think that's one of the reasons why we're seeing the barometer, the measure of producer sentiment, fairly low. And as we've been meeting with producers, that stress is there. So what we want to do today is share 3 strategies, 3 tips to help you navigate that decision-making chaos just a little bit. And so we're going to kick this off with uh, our first strategy, which is to get very specific about the uncertainty that we're dealing with. And oftentimes, this is we use a broken process to think about uncertainty. I think this is an example of the coffee shop conversation, or the conversation where we're kicking the tires with our neighbors. And when we want to have a conversation about uncertainty, we want to learn from others. We want to think about, challenge our thinking, challenge our assumption a little bit, but we often use the wrong tool. And so we often start with an open-ended question like, do you think corn prices will go higher? And then we provide a vague answer like probably or seems likely. And these are answers that an economist or a politician might give you, but it's really not helpful for us to cut through the noise and get specific about the uncertainty. And finally, the last part of this broken process, the of doom thinking about uncertainty, is that when you have an open-ended question and you use vague answers, you're never going to be able to get a resolution. And so you can think about, what did you mean by higher corn prices? If you just wait long enough, you'll eventually be right. There's a kind of a saying in the stock market: you either predict the price or the date, but don't ever predict both. Because if you leave it open-ended, you can always be proven right, or you can always say that your neighbor was wrong. And this is the broken process. This is something that we want to get an improvement on. We want to have a better tool, and so this is a framework that we use for how we communicate. Even Brent and I together communicate. We also challenge ourselves, but we also challenge other producers and other lenders and others in agriculture to think about this framework. So the first step is to start with a specific resolvable question, use probabilistic answers, update your expectations, leave notes along the way, and then go back and see how you did. So here's an example of how it might look like. And you're going to see right away, it's going to be a little bit of a challenge. So what's the probability of the December 2023 corn futures exceeding $7 a bushel before August 1st of 2023? That's going to slow down your thinking. You're going to have to go look up what's the current price of the December contract. And then we're going to have to give a probabilistic answer. It's like the weather forecast. Is it a 25% chance or a 75% chance? And oftentimes, that's a helpful exercise for you to go through. But once you go through it and you can share those expectations with your peers or your teammates or your lender, you're going to be able to cut through and actually have a really substantive conversation about, well, how did you get to that conclusion? What are you watching? What are you going to how are you going to update your thinking if new information becomes available? And that moves us to the third point here is, you want to calibrate your expectations and your forecasts. Over time, does this become more or less likely? If the WASDE reports showed less stocks and the market moves up, you're going to update your forecast. It's also important to leave notes. What were you thinking in September 2022? If you're like me, in a couple weeks when the calendar moves to October, you might forget what you're thinking about in September. So leave some notes to yourself as you think about that. Have a good conversation. Maybe jot down some of these ideas in a decision journal or make some notes to yourself. But then finally, always go back and have resolution. Really step back and say, did this event occur? How could I improve my thinking? What did I miss? What did I put too much weight on? When could I have updated my forecast sooner?
And I think the reason this stuff is all so important is we are very good at telling narratives to ourselves about why we were right or why we were wrong in retrospect. And I think it's just very helpful to start out by thinking about it. It helps you frame the situation a lot better rather than saying, well, I'm just worried about corn price. Well, why are you worried about it? What price levels would it take to be successful? What are the numbers? What do I think the chances are of getting there? And it just helps you make better decisions because what we want to do is move out of this kind of emotional decision making into a kind of rational process.
The last point we want to have on this idea of getting specific about uncertainty is you can start thinking about this right away. You can deploy some of these questions, and Brent and I think about this a lot. We have a lot of questions that we challenge producers with, but these are three that are very specific to your operation. You're going to be making a budget here in a few months. You're going to have to put in a price for your corn crop and your soybean crop. You're going to have to put in some yield expectations, and you're going to have to put in a herbicide plan, and you have to put down an estimate for those. So you think about what's the probability of you being able to sell your crop above that crop budget price that you put in? What's the probability of your yields being above those budgeted yields? And what's the probability of that herbicide plan that you put in for $45 or $50 an acre? What's the probability of it getting the desired effect? Are you going to have to come in and have another pass, or are you going to have some weed issues? And if you add those probabilities into your thinking, but also into your conversation with your teammates and with your trusted advisors, it can really help you cut through that and make some better decisions. The second idea here, and I'll just get started here and pass over to Brent really quickly, is we want to also get specific about the risks that are keeping us awake at night. And so we found this tool really helpful. It's something that we've been doing for the last year. And Brent, I'll let you kind of explain this just a little bit, the idea of getting very specific and limiting it down to 3 risks.
Well, so one of the things to try and encourage people to do is really think about all, we talk about risk management a lot, but the idea here is let's get beyond the kind of just general platitudes about it and come up with, what are the 3 things that you're most concerned about heading into 2023? So you start by identifying a whole bunch of risks that you're concerned about in your farm, and then start to prioritize them, summarize them, share those key risks, discuss them, but really try and dig into what you think your top 3 are and what are your options for managing those risks. And this came from, I think Jamie Dimon wrote in his letter to shareholders, the chairman of Citigroup, or let's see, JP Morgan, uh, wrote a nice letter about this, and it really, I think, is a useful framework to start thinking about risks. So identify them, summarize why they're important, talk to them about within your farm team, and start thinking about what your options are to evaluate them, and to solve them. Okay. So keep in mind, everybody's going to have a different list. And, David and I write one of these for Ag Economic Insights, and you can see in 2022 our list was, global economy, U.S. and global economy issues, macroeconomic issues we thought were a really big thing. We also were concerned that there was getting to be a lot of excessive exuberance in the ag sector, and we thought there was potential for demand destruction on the commodity side with these higher prices. Now, you'll note those we're writing those risks for the big picture. But if David and I were to do that for Ag Economic Insights, our list would look very different. It'd be much more specific. The risk might be, oh, what would happen if David, for instance, we have a key key person problem in our company. If David, something happened to David where he couldn't work maybe for a little while, what would be our response? So I think on my farm, I think about the same thing. Maybe you have a transition issue that we all know about, but we kind of just like to push it on to the next year. Maybe it's a crop yield problem. Maybe it's a price. Maybe prices are your biggest risk. But what we want to do is get you to get that plan for your three top risks and then come up with a way to manage those. Because the biggest, I think, challenge with risks, especially some of them, is that it's easy to delay. They're hard, so we just don't deal with them. And then when they come due, they can be really problematic. So what we want to do is try and get you moving forward on those.
So, Brent, I'll just add a couple thoughts here. If we're not proactive with the risks that we're worried about and the risks that we're pursuing, it's easy to become reactive. And all of the noise out there about on social media or in traditional media telling us, this is the biggest overlooked risk, or I mean, every time you pick up your phone, you're going to find an article that says this risk is being overlooked. So we might fall into this reactionary phase. And so if we're reacting to all of the risks that are involved, it can be overwhelming. So prioritizing those three is really, really difficult, but it's going to be really invaluable for sharpening our thinking and sharpening our focus. Also, three is an easily remembered list. If you have the three things, you're going to be able to communicate that with your partners, with your family, with your trusted advisors, and so you could be ready to have that conversation. I think if you have that list ready for yourself whenever you go meet with your lender the next time, that could be a really valuable conversation. I also want to mention the last slide had a blank screen, a computer screen with a blank screen, and that is the blank page phenomenon. That is the most difficult thing for anybody to overcome. And so the blank screen can be very intimidating. The blank page can be intimidating. And so just start by making the list. Just capture ideas and then move to the prioritization and then move to the summarization, and that will be really important. And lastly, chance favors the prepared mind. There's that famous quote, and you never know who might have a solution for you. Someone could help you reframe that risk. Somebody could provide a solution. Somebody could help you be at ease about it, but always be ready to sort of have those conversations and be open to new ideas and solutions. The last idea that we have here is the idea of positioning over prediction. So we spend a lot of time helping you think through, getting very specific about what's the uncertainty, what are the risks that I want to focus on. Now the idea here is to take this one step further, and predicting for the sake of predicting oftentimes isn't valuable. Unless you're a bookie or unless you're trading in a speculative market, predicting for the sake of predicting is often futile. We now have to position our business in reflection of those predictions, or in as a reflection of those expectations. So maybe you're really worried about commodity prices tumbling. And we hear a lot of producers telling us that. It's really important to frame that up, as we talked about before, but then to say, how can I position my operation as a reflection of that? And so some of the potential strategies for that above case might be you adjust your marketing plan. Maybe you get a little more aggressive in your pricing for 2022 and 2023 crops. Maybe you start thinking about how can you adjust your cost? How quickly can I adjust my cash rent or my family living expense or my debt service if we go from a $5.50 to $6 price range to something more like $4.50 or $4, even below $4, where we were before the pandemic, let alone the trade war. And finally, maybe I just need to build up my balance sheet. Maybe I need to put in some financial reserves for my working capital. But these are the types of conversations that you could have with your lenders, with your teammates, and really it allows you again to move past that chaos of all the noise of everybody talking about all the challenges out there, and allows you to position your operation. I want to add this picture here. It might not seem like it fits, but this idea here is sometimes there's this idea called get there-itis. You might see it when you travel or and there's a snowstorm, and all of a sudden you're trying to predict, like, will our flight be able to leave before the snowstorm hits? Or will we be able to drive through Kansas City before the ice storm hits? And it creates this trying to beat the forecast, and you're trying to get on the prediction. And oftentimes we might just step back and say, hey, maybe I should take a different flight. Maybe I should take a different route. And that's the idea of positioning. We sometimes get really focused on sticking to the current plan and trying to beat the uncertainty, like trying to outsmart the markets on where commodity prices are going to go. And maybe it's just a small pivot in our positioning of our business or our business model that can help us navigate and go around that trouble or that uncertainty or that risk.
Absolutely. Very good point.
So Brent, we're starting to wrap up here, and want to encourage listeners today to submit their questions through the Q&A portal or the chat section. Also, share some of the risks maybe that you're thinking about from your farm from a couple slides ago. Go ahead and share those, and we can, Brent and I will be willing to share that and talk about that a little more here in a little bit. But as we wrap up, one of the challenges that we have for you and for all of us as individuals is, how can we insulate ourselves from all that chaos to become better professionals and better decision makers? There is not a lack of information out there, and oftentimes it's how do you sort through what's a relevant piece of information? And oftentimes it's not a lack of uh, it's not a lack of not knowing what to do, but knowing what are the right steps to deploy in this specific situation, in this specific case. And so I want to challenge you to think about that. And I hope these tools have been valuable for you as you deploy those here this fall and into next year.
Yeah, and I think at the end of the day, that's what we're trying to do. And David and I can answer a lot of questions about all of those uncertainties, all the macroeconomic uncertainties, and just all of the things that are going on in the markets, and we're happy to do that. But one of the things that we really pride ourselves on is trying to help people get better prepared to make their own decisions, because at the end of the day, that's what we have to do as business owners is make our own decisions, navigate that uncertainty, and position our businesses to be successful. Now, keep in mind that I think this year, David, I think to wrap it up, probably, we're really optimistic about the ag economy in 2023, 2022 particularly, but 2023 probably as well, because there are a lot of opportunities. And you saw at the start, the profitability levels in the sector as high as we've seen for a long, long time. And so I think that this environment creates a lot of opportunities, and a lot of opportunities to really do things well and get our businesses on sound footing for the next 10 years in this environment. And one of the key things I think is really thinking about how do the decisions that I'm going to take today impact those long-term goals? How do I get positioned to achieve those longer term goals that I have for my business? And one of the first steps in that, of course, is getting those long term goals written down.
I think the other thing, Brent, I want to mention here is the farm economy. If you look at that barometer, we saw a lot of stress or a lot of pessimism in producer sentiment 4 or 5 years ago, or during that trade war, or during the tight margin era. And then there's sort of a similar level today. And so I think it's important for producers to recognize that this is a very different environment, in that, yes, it's stressful, and yes, there's still some difficulty out there, but there are profits. And there's a difference between having no good options for what decisions you have, that we had 4 or 5 years ago. And this environment today is more like stress because of picking through which option is the best. So maybe there weren't a lot of profits to upgrade our equipment, or maybe we were deferring our equipment because we didn't have those earnings to do that. Now we're trying to decide, do I buy this used piece of equipment that's available now? Do I put my list on to buy this new piece of equipment? Do I try to trade it in? Do I try to my old piece of equipment? Do I sell it myself? I think that's a very different situation of decision making. So we're ready to answer all or any of your questions that you might have. Gary, looking forward to having you join us and answer those questions. Also, if there's any of those risks that producers shared through the dialogue, we'd be curious to hear those as well.
Yeah, great. Thank you, guys. That's some really insightful things. Micah, are you seeing anything in the chat?
Yeah, I did have a few that came through. A couple of customers had identified those risks that David and Brent had to ask about that I thought would probably be at the top of mind for many of our producers. So I have four of them here that I thought was kind of interesting. So first off, inflation, input cost, and land cost, obviously. But that fourth and final one I thought is probably pretty relevant to a lot of growers. And that was the family succession and that being a risk for their operation. So I thought all four were really, really good risks that our growers had identified. One
Yeah,
quick question that came through real quick, Brent, was how has your all's risk that you identified in the beginning of 2022 changed now that we're on the back half of the year in quarter 3 here?
okay. David, how do we want to approach these? We can start. I'll just start talking in general about the inflation situation, and this is really unprecedented what we're seeing for most of us. I mean, most of us probably on this webinar have not seen inflation at levels that, at these levels for our careers. So it's a really unique environment. And the problem with inflation, Dave always tells a story, but if all the prices went up by the same amount, it really wouldn't matter, would it? The problem is that not everything goes up equally. And so as we think about inflation, oftentimes the cure for inflation is thought to be higher interest rates. Now, what I always caution people is that yes, that is kind of true, but it's a very blunt instrument. So if you think about how that works, the Fed is going to try and raise interest rates to kill off inflation. Well, how does that work? Well, it has to feed through the credit economy. So people start borrowing less because of higher prices. It cools off markets. That takes a long time, and it's a complex process, and it's a blunt instrument. It's not like if you just read the press, say, well, Fed's going to raise interest rates, inflation's going to go down. It doesn't work that quickly or that directly. It's a blunt process, and we need to remember that. So there's a potential for a lot of bumps along the way. And I think it's important that we consider that in our business to think about, what are the impacts, might be the impacts of higher interest rates on our business. What might be the impact of changing land values or changing commodity prices in our business? So it's just important to think that through.
I'll jump in and talk a little bit about inputs a little bit. I think every input category is probably seeing a substantial increase. I know a print shared with me some of those other categories are the ones that are being the big surprise, like shop supplies or those catch-all categories, or even seeing a lot of change in those values. There are two drivers behind some of this. Some of this is inflation throughout the broad farm economy, but some of this is throughout the broad economy, the U.S. economy. Think about family living and all of those other expenses that we're just sort of get fuel, for example, another one. But another driver that's fueling higher production costs is stronger income. When we see those high net farm income estimates, that's driving the real estate market for cash rent, but also farmland values. It's driving farm equipment values. And so there's a lot of profits out there. And that's another part of this story here in agriculture. So there's the broad story in the economy, but also the strong profitability story in agriculture that's creating a lot of upward pressure on our cost of production.
Yeah, and I think just thinking critically about these things is important. Inputs are another one. You mentioned fertilizer. Um, we encourage people to think, yes, I know there's sticker shock on fertilizer. I buy a lot of fertilizer on our farm. I'm not, excited to be paying prices that are substantially higher than I did 2 years ago for fertilizer. But it's also, I think, important to think about, okay, how high are fertilizer prices relative to, let's say, our budgeted income? And what proportion of those fertilizer prices make up of kind of your crop revenue? And I think when you look at the number that way, you come to a slightly different conclusion than you do if you just look at the ultimate, the initial price. Because the initial price might be, well, I'm just going to use a lot less fertilizer this year, or I'm going to plant crops that don't take very much fertilizer because fertilizer prices are high. I think that's the level one thinking of it. And level two is, well, let's step back and look at where the crop revenue might be and think more holistically about it. And I'm by no means kind of trying to justify higher fertilizer prices or anything like that. I wish they were lower too, but I think we have to think through it rationally and make good crop input decisions given the situation that we're in.
So, Brent, I'll get to Micah's question about our list from 2022. I think maybe it's a little too evergreen. I think some of the issues we listed could still be on the watch list for 2023, and we're going to update that list. But thinking about the macro economy in at a U.S. and global level, um, I think we saw the Fed raise interest rates. We've seen uh, somewhat aggressively. We have seen inflation linger more than probably most of us thought a year ago. Keep in mind, a year ago we've only had 3 or 4 months of data saying that inflation was concerning, and now here we are a year later with 15 to 16 months of data, and that's a very different situation. But going back to Brent's point about the blunt instrument. This can have a long-term effect. It's going to take a while for all of these things to work themselves out, and we're 1 year into this, so to speak, and so we'll see what this looks like a year from now. But this could be a very long journey. I heard some people talk about, you think back to the 1970s, even that was a 10-year sort of period of high inflation. I'm not predicting that, but I think we need to realize we're probably not going to solve this in a month or two. And really, the Fed's been on the job for about 6 to 8 months now, and so it's gonna take some time to see how this plays out. I also think on the excessive exuberance, one of the ideas there, and we're going to share the article in the follow-up. I'll include we'll share a link that Micah can share in that follow-up along with the PowerPoint slides. Is that really think about how the latest farmland value data has impacted maybe your thinking, and if you don't think it's impacted your thinking, think about how it's impacted your neighbor's thinking, right? Think about how these changes in farmland values have started to impact expectation about the future of farmland values and what next year might have in store. I remember from the Purdue survey last year, I was surprised when we had 14% annual increases. And then this year, it was a little bit numb when we saw a 30% increase. And so these are giant historic changes having big impact on wealth and perceived wealth and the balance sheet. But how does that start to work its way through our everyday decision making process? That could still take some time to see play out as well.
Yeah, and I think the land cost was brought up as something, to concern or a question, and I can understand that, and I think one of the things we have to do, I think, is be careful, not to get locked in too long for too high of prices. And how can you go about that? Well, one of the things I think in the land markets, like every other market, I mean, there's different ways to get business, and one of the ways, let's say you're a grain elevator, let's put it in that context. So how do you get more grain in your elevator? Well, the easy way is you do what? Offer the highest prices, right? So that is same is true in the land market. That can be a pretty risky strategy, and so if you're always paying the highest prices, sometimes you can find yourself in trouble if things reverse. And so look at what those elevators do. How do they try and differentiate themselves? How much space they have, what the delivery time is, they offer a whole bunch of different ways. They try and build a relationship with you. They do things to differentiate themselves. And I think in the land market as farmers, I know you folks are doing that as well, but it's worth just taking some time and thinking about what is your strategy there. What are you doing to differentiate yourself from the other people that are renting land, and try and execute that going forward. The succession issue is another one that I think is in front of a lot of us. And I know um, even personally, that's a big deal, and it's really hard to get people off of let's wait till tomorrow to uh, to make a decision, and sometimes that can be really really tough. Um, and so, what I always encourage people to do is let's just start thinking about baby steps. As to how we're going to move forward with that plan. We don't have to put it all in place. We don't have to let great be the enemy of good, or however that saying goes. Let's think about some baby steps that can get us moving toward that succession puzzle. And maybe it's, taking a little bit more responsibility, or giving a little bit more responsibility to the next generation today. Doesn't have to mean turn it all over. So just thinking about, what are some small things we can do to get things moving forward.
Well, David, Brent, that's some really great insights there. Quick question I have is we've had several risks identified, whether it's input costs, rising interest rates, commodity prices, inflation, family succession. What about, are there any overlooked risks that maybe producers should, obviously carefully consider? Something that you suggested, start with that blank page. And as attendees might take that blank page and start writing some of these risks, what are some of those risks that maybe we might overlook?
So one of the things, and this kind of might sound a little bit surprising from my perspective, because, David and I get paid to think about these big macro risks a lot. But when I think about, just my own business, I think about things like key people, and, what am I doing with the employment process in our farm to keep the people that I need to keep in my operation, and what are some things I can do, because it's easy and it's so tempting to, like, take that for granted. But it's a huge risk if something would happen at the wrong time of the year. It could really put us in a bind. So I like to look at that kind of stuff, and um, it might be an upcoming retirement in your operation as well, or your parents deciding to do something slightly different. Those are all big things. Now, I think when we think about the big macro risks, though, we'll go there. The one that concerns me the most is our relations with China right now. So if you look at why grain stockpiles are tight around the world, and they are, and we didn't show those charts, but grain stockpiles are very tight. And they've gotten that way because we've had subpar crop yields kind of around the globe for the last 3-4 years. So we've gotten ourselves into a tight stockpile situation. Those take a little while to resolve. So we're going to need some good weather to fix that situation, barring nothing else happening. So when you look at that, you get pretty excited about where commodity prices could be. The other side of that, though, is that's contingent on demand remaining strong. And the one area where demand has been very strong is China. If you look at Chinese purchases, David's got lots of charts on this. He's convinced me that, China is buying a lot of stuff. Maybe not as many soybeans as they normally buy, but a lot of grain commodities like corn that they haven't bought for a while. And what concerns me, the big risk, is if those relations with China, which are, I don't think you could describe them anyway as being good right now, were to deteriorate even further. Could we find ourselves in a situation again where our demand is upset? And that would be a problem. And I don't see a lot of people talking about it, and I don't think they will talk about it until something bad happens. And then it will be all anybody wants to talk about.
So I think that's just to add to Brent's idea, and I think this is probably going to make some version of this idea. I think we'll make, well, at least I'm going to lobby for it to make our top 3 risks for ag in 2023 list that we'll come out with next month. But I think one of the risks is, to steal an idea from aviation, is a rapid depressurization. So this idea of a rapid change in the status quo. And what do I mean by that is, we see from 2016 to 2020 in that net farm income story, and you can remember back to your budgets, they were lean times, they were tight times, they weren't great times, but there's a trade war in there. There's a lot of ad hoc government payments, but you were able to somewhat anticipate what the next year might look like, and you could start to make some cash rent agreements that maybe were multiple years, or you were able to take on some debt, and you could have some reasonable expectation as to what 3 or 4 years down the road might be. I think when we look at where we are today, we have a couple years of strong profits, a couple years of strong high commodity prices. If we see a rapid change to the downside, do we have, I think a lot of producers know that's a possibility. I think everyone in ag knows that that's a real possibility. But the longer we spend at this high level, the more comfortable, the more that recency bias starts to play into our thinking. So we start thinking like, oh yeah, I could take on this aggressive land payment, or I can pay off this new piece of equipment in a shorter time period, or we start building these business plans around that. So a rapid change in that environment could leave us vulnerable for how quickly can we adjust our cost structure, how quickly can we get to a new paradigm. I think that's this mindset shift of a rapid change, one way or the other, but it's these large changes that happen in a short period of time. That's what I'm concerned about. Gary, I'm curious if there's anything that from your lender seat that you would add to this.
Yeah. Well, I mean, my list that I was kind of jotting down as we were kind of going through the session here: input costs, rising interest rates, commodity price, fluctuations were kind of the highlights. Supply chain issues, supply chain deficiencies. Last week I think we avoided the rail strike, which I think could have been very devastating to us this fall. Something bigger that just an escalation in the war in Ukraine. It looms out there, and I guess I never thought that it would have even gone on this long, but it has. And just I think going into the fourth quarter and into 2023, if it escalates beyond the Ukrainian borders is one of those risks. And what does that do for us in agriculture and the broader economy?
Yeah, those are all really important things to think about, and I think real risks going forward. The interest rate one, I think, is one too that, as David was talking about, kind of getting complacent and getting comfortable with. I think we've gotten pretty comfortable with low interest rates, and low interest rates mean a lot of things go high, particularly asset values, and farmland being one of them. These really low interest rates are really important for agriculture, and are something to really watch carefully. And when I talk about those, I try and encourage people to look at the longer term interest rates of 10-year treasury rates, even longer, to get a feel for where things might be headed, because the ag market will adjust, I think, more slowly to the interest rate um, increases than some other sectors of the economy. And so you can kind of get a feel for where that's going to go.
I know we're
Thank you so
Yep,
so
go ahead,
much,
Micah.
David and Brent and Gary. And I think that this was such a great conversation. The thing that I wrote down that continues to connect all these dots is that an open conversation with your financial officer at your local office, we have those tools and strategies to help mitigate those risks, right? And so, whatever those top three things that you identified as challenges for your farms, I think that there is a really great conversation that can happen between you and your financial officer to identify how we can mitigate some of those risks and be your partner in the lending process. And so thank you so much for this information, all three of you, and your insights. We are at our time here at 10:15. For those of you who are maybe only able to grab half of this webinar, we will be following up via email with a recording of this, hopefully within the next week, that will have some information that David has alluded to that he would share, as well as a recording of this webinar. It will also be posted on e-farmcredit.com. So thank you all so much for joining us. Until next time, we hope that you'll reach out, have these conversations, and really start to be strategic about those uncertainties that may be facing your farm. Thank you.
Thank you.